Welcome back to Capital 10X. Today we have Mr. Paul Rosen. He's the CEO of 1933 Industries. And we're definitely pleased to have you here. Welcome.
Thank you. It's a pleasure to be here.
Excellent, excellent. So first of all, just for the purpose of and the privilege of our interview of our viewers, can you just give us a bit of your history and your background in the cannabis industry, and also what you're bringing as the CEO of 1933?
Definitely, I'd be happy to. I mean, my cannabis journey begins as a patient, or at least as a consumer, when I was a young adult, way back when in the 1970s. So I've always been pro-cannabis. I've always seen cannabis as a medicine and a wellness product, and I always thought it was mischaracterized as a narcotic. But I entered the industry proper in Canada in 2012. My background was I am an attorney, licensed attorney in the province of Ontario, but I have not practiced law in several decades. I've been an entrepreneur most of my life, and I've had the good fortune of starting some legacy companies outside of cannabis. But in 2012, when the then conservative Canadian government began to articulate a commercial licensing program, I really had that sort of entrepreneurial flash and had a sense that this was going to be the birth of an amazing, large scale and disruptive industry. And I started then what was my first cannabis company with a few co-founders in Toronto. It is now known as the Kronos Group. We had a few name changes. It was PharmaCann Capital Corporation. I took that company public as president and CEO back in December 2014, quite a long time ago. And obviously that has gone on to become one of the most valued and recognized cannabis assets in the world. But I've had quite a few other startup and advisory posts in cannabis. I started another company called Title Royalty Corporation, which was acquired by a multi-state operator called Red, White, and Bloom. I was also chairman, CEO of that company, which went public on the CSE. I sat on the board of Ianthus Capital Management, a US MSO trading on the CSE. I serve as executive chairman of Global Go, a cannabis-based advisory based in Los Angeles. And I've had the good fortune and pleasure of investing and or advising in over 100 cannabis companies. So I have been pretty much 24/7 nonstop in the industry since 2012, and I think the best days are still in front of us.
Yes, definitely, definitely. And it sounds like you have some extensive experience basically in the North American market, Canada, as well as the US. Could you also just highlight some of the differences and contrasts between the US and the Canadian market? And then also, we want to get your take on the prospects for, legislation, for federal legislation opening up the US market as well.
So, every regulated cannabis economy has a lot in common, but there are, of course, material differences. We can see obviously the most profound difference in America compared to Canada is the fact that there's still a discrepancy between federal law, where cannabis remains illegal, and state law, where in 33 of the 50 states, you've got either medical or recreational cannabis programs. Contrast that to Canada, where we have a federally legal program, and you see that is the most profound difference. But I see the US market as the great growth market with the highest ceiling in cannabis right now. And I say that that ceiling is high for a number of reasons. One is the total addressable market is massive in America, close to 400 million people. Two, it's a very entrepreneurial and free enterprise culture. So Canada, we're a little bit regulate first, market second, and America's a bit more market first, regulate after the fact. And I just see the type of offerings in a US operator, a dispensary, say, really a bit more market sensitive and a market responsive than in Canada. Why I love the US market is because it hasn't yet to have this existential breakup moment, which will happen when federal and state laws harmonize. And I predict that when that happens, you're going to have another very bullish market for all credible US operators. So I have been working pretty much most of my time in the US industry since 2017. I see Canada as a great market, but largely we now know who are the incumbents, and we have a good sense about who the top 5 companies are going to be. Whereas in the US, there's still a little bit of a less certain dashboard and still opportunities for new companies or existing companies to really have a meaningful impact on the development of that industry. So I'm really bullish on the growth prospects of the US cannabis and hemp industry, more so than on Canadian.
Yes, yes, and also, basically speaking about some of the opportunities that are arising in the U.S. as well. I wanted to more get into basically your company as well, because you recently released a Q3 report, and can you just sort of go over some of the highlights of that for us, as well as give us some more
Sure.
of your focus and just enlighten us on
Yeah.
what you're currently doing.
Definitely. 1933 Industries is a Nevada-based, vertically integrated cannabis operator. And like a lot of the Nevada companies, the last quarter really reflected some of the challenges that COVID imposed upon the economy. And I'll say that particularly the Las Vegas economy, not the cannabis economy, but the macro economy, was probably the most affected of any major metropolis in the United States, because the dependency on the Nevada cannabis economy, or excuse me, the Nevada economy proper, it is so heavily dependent upon tourism that an abrupt stop to people visiting, for that sort of classic Vegas weekend or weekday getaway just ground to a halt. And while there is a domestic market there, the entire Nevada economy does greatly depend upon tourism. In fact, Nevada's unemployment rate during COVID was about 2 times the national unemployment rate, reflecting the dependency on the hospitality industry. Further compounding the last quarter for Nevada was that the dispensaries were physically closed for about 6 or 7 weeks. And while there were hacks, such as curbside pickup or delivery, it's inconceivable that the industry can do the same quantity of transactions without access to those brick and mortar dispensaries. Just as an example, a large, say, Las Vegas dispensary like Planet 13, where we sell through, they're not able to deliver the same quantity and frequency of transactions than they are able to service in store. So the last quarter, definitely for 1933, but pretty much for the entire cannabis industry, was a step back on top line revenue because there was just not as many customers as there had been the quarter before. On the other hand, it gave 1933 a really good opportunity to start making some important critical decisions to create the next round of growth for the company. And it might be one of those adages where in a prosperous time, you maybe don't pay as much attention to every bottom line detail, but in a time of austerity, it forces a good operator, a good efficient operator, to start looking where there are additional efficiencies to be captured. And certainly in 1933, despite the fact that we did feel the impact of COVID on our top line, we've really started to make meaningful improvements towards cutting our spend down to really what is the most critical aspect of our business. And we have a lot of reasons to be optimistic in 1933. The Las Vegas economy is recovering. It certainly isn't back to where it was before COVID, but it's looking a lot more robust than it was in April when COVID really hit most dramatically. But also, we've made a number of important management changes in the company. Myself operating now as Chief Executive Officer. This will be the 3rd time I've been the CEO of a public company, so I do bring a lot of experience in terms of capital markets and operations. And we have brought in a fantastic new president named Gene Ruiz, who's a chartered accountant and a CFO, and who has run some big companies in the agricultural space prior to taking a lead role in 1933. And just in a short period of time, Gene and I have been able to start creating really positive change that will serve 1933 very well as it comes out of the sort of the COVID period and anticipates a resumption of full business. So I look at it that this has been a tough experience, but one that no one could have predicted, or nor could anyone have avoided. But the history will look back to say, what did companies do during the COVID downturn to improve the overall efficiency of the business? And I'm happy to say that 1933 has taken some really positive, even dramatic steps to create efficiencies, to be very careful about what we spend our money on, And now we're getting ready to harvest the largest crop we've ever harvested in company history. We've opened up and optimized a new production facility that has 3,000 healthy plants being grown right now. And we see that the future looks very bright for us in that we've made the necessary adjustments to the expense side of our business, and we're optimistic about a substantial increase in our revenue as our production capacity essentially has 10x'd over the last 2 quarters.
Yeah. So you're looking. So there are some green shoots that are developing within the Nevada market, as well as the overall California market as well. Is that your main strategic focus as we move forward from basically the crisis with COVID? Are we looking more to just basically expand that operation regionally in that specific area, or are there other areas that you want to discuss as well?
My major focus, my laser focus now is on achieving cash flow positivity or becoming earnings positive. And so everything that we do is being done now through the filter of how quickly will it get us to becoming earnings positive. And so definitely we see Nevada, of course, the state where we have the greatest amount of infrastructure and the greatest amount of opportunity. We see really focusing on Nevada in the here and now as one of the key strategies towards getting to earnings positivity in the next couple of quarters. All of this subject to execution, so it's not a certain thing, but we see that Nevada is really going to be where this company makes its bones over the next year or so. And then in terms of other states, California where we have exposure, other states where we are looking at opportunities right now, if it meets that test of achieving or expediting our accelerated path towards cash flow positivity, then we're going to deploy resources in those states, whether it's California, Massachusetts, Oregon, Washington State, wherever there may be. But at the same time, we're bringing a rigorous focus on the here and now in Nevada, because that's where our major assets and our major infrastructure resides. I should also say that we're very active in the non-psychoactive space. So we'll just call that non-psychoactive CBD through our CannaHemp line. And although it hasn't made much noise in the last few weeks, CannaHemp has been accepted as a vendor on both Amazon and Walmart.com, which are 2 of the premier e-commerce platforms in the world. And we're pretty optimistic that we're going to be able to see a national rollout in a way that we haven't yet achieved for our non-psychoactive brands, taking advantage of the slot that we had to work to get on both Amazon and on Walmart.com. So everything that will address our focus towards achieving an accelerated path towards cash flow positivity is on the front burner. Everything that is more aspirational and long-term is currently on the back burner.
Right, of course. I did have some additional questions, but within that response, you pretty much covered most of the questions that we had. But yeah, I'd definitely like to thank you for joining us once again, and we'll definitely speak with you again in the near future.
Oh, it's my pleasure. Thanks so much for your time and your interest. Best wishes to the audience at home. I'm easy to reach. If anyone has any questions, you can just find me on LinkedIn or send me an email. And I look forward to speaking with your listeners at the appropriate time. And thank you for your time today.